All right, welcome everyone. Hope you're having a fantastic day. Let's go ahead and make sure you all can hear me. If you would please type the number one in the chat box to let me know that you can, I would greatly appreciate it. All right. Loud and clear. Afternoon, Kevin. Thanks, Patty. Come on. Why won't you let me open this up? All right. Doesn't want to give me the full chat window. There we go. Finally. Hey, Brenda. Afternoon, Jim. Stop moving around here. Zoom chose to not allow me to log in from my normal method. So I had to kind of jump through some hoops to get in here this morning, or this afternoon now, but it was this morning when I was trying. All right. So keep in mind as we get started, everything we look at is for education. Nothing's meant to be advice or recommendations. Find something like anything. Make sure it fits your own personal risk profile and risk tolerance. There we go. Camera is on. Screen is not shared. Thank you for that. Place your current screen. Odds of the one. Beautiful. Come on, show it to me. All right, there we go. All right. Hey, Lan, welcome. There you go. And thanks, Andrew. Much appreciated. All right. So here's our agenda for today. We're going to go into our follow us page. Then we'll hit today's trades. And that is not just the trades that I've done, but any trades that you've done. Funded, not funded, I don't care. Win, lose, draw, I don't care. They could be today. That's ideal. But if you had, maybe you didn't trade today. Maybe you did on Friday or Thursday. Good, bad, or indifferent, I don't care. Everything is non-funded. I don't care. I'm not going to judge someone and say you did this, you did that, whatever it is. Then we get into economic reports, market review, upcoming future trainings, our weekly topic, which is our teaching or education component of today, and then your stocks in review. To me, number 7, that's the most important one in the entire day. Looking at the candidates that you have questions on. That's where we should be spending much more time than we actually do. So if you've got candidates, ask, hey, Rob, I'm looking at Apple. Hey, Rob, I'm looking at Microsoft. And if you could tell me the why, even better, because I can analyze it that way. If you just say, look at Apple, I'm just going to tell you what I see. But you may say, I'm looking at Apple for a credit spread, or for, if you do that, I may have a different opinion. It may have a different opinion of it. Here's our follow us page. Everything on this page, you can go right to the platform itself, whether it is LinkedIn or Twitter, X, Facebook, YouTube, and the likes, right? But Trading Post is not. That one is a link that we'll drop that in now, but that is our newsletter. Goes out every single morning, first thing in the morning. It's got 5 actionable companies in there on top of a topic, which is each day of the week. There's a different theme that we've got for that newsletter. So go ahead and check it out. It is free. There's no cost for it, but we do not send it to everybody. You have to say yes. We've got a couple thousand people on there now. So, all right. So today's trades. What trades have you done? Drop those in. Again, win, lose, or draw. I don't care. Funded or non-funded. I don't care. I just want to know what we've done on trades. So Jeff, first one in there. NQ, which is the NASDAQ futures. 8 trade, longest one, 37 seconds. Woo! 1 loser, 7 winners, plus $317.54. Different account, up $120, 8 seconds on 1 trade, all within the first 16 minutes of the open. That is fantastic. Great job there, Jeff. Great job. Jeff is scalping if you haven't figured it out. 8 or 9 trades in 16 minutes, right? They're all scalps. Again, nothing wrong with it. Scalps work. Jeff loves that stuff. That doesn't mean it's your trade. Doesn't mean it's the only trade. It's just a trade, right? Lots of kudos there, Jeff, coming in from everybody. Jim said Friday I got into an XPXW, like William or Win, call and rode them up for a 68.22% profit. Nice. Good job there. Good job. Excellent there, Jim. Much appreciated. While we're waiting for them to come in, guys, let me go grab my Omega charts. APP. Now, remember, the way that you trade, or the way that I talk about trading, is a lot of times is the pop style. And I really teach that methodology, whether it's in pop, in our inner circle, in here, it doesn't matter. I'm very in tune to that because I do believe that I have found the right way for everybody to learn how to trade is utilizing the pop methodology. That doesn't mean it's the only trade setup there is, right? We took a big gap up today, right? And depending on how it reacted on the open, we've got a very specific methodology for what we trade. But what or if we trade this today based on that, right? So if we go and look at a 5 minute chart of APP, you could see we gapped up right to the fib line and we just ran. 3 candles, we hit the next level. All right, we didn't really get a pullback, which is what we want to see. Ideally, breakout, retest, bounce. Okay, let's bring it down to a 1 minute candle. So a 1 minute candle, and I don't have my drawing tool started. On a 1 minute candle, we got the same gap up. We gapped up right to the fib line, right there. Let me grab that so I can open the drawing tools. We gapped up to the fib line. We closed up. We pulled back. I did not get a close close enough to this to make it a true fib. I'm sorry, true power options play a pop setup, but it is a setup that I will take on times based on what the market is doing. And that's exactly what it was. I wanted the market to make a move up and bounce. Why? I was looking for a horse to ride today, no matter how you slice it, folks. And we'll talk a little bit about this after. But no matter how you slice it, this potential of shutdown being over is tremendous. Tremendous. And on top of that, the funding the government until January, SNAP going all the way until the end of 2026, I believe it was. Great, or for a year, which is close to the end of 26, is great, right? People that shouldn't be without the monies are going to get the monies, right? Whether you like the program or not, it's got nothing to do with it. There are some very needy people on that program that we need to get those benefits to. So that us fixing that and then paying the millions of federal workers that are not working, and what did it take to fix this? The FAA to say, yeah, you know what, we're going to cut 10% back on 40 major airports throughout the US. And although it may not affect, like I saw something, a TikTok, ironically, from somebody that is, whether they run it or work at it, out of a very small airport on Long Island called MacArthur Airport. Although the airlines that we have are not affected by it, they didn't hit our airport, but there are 40 other airports around the country that we serviced. I forgot how many of them, 17 or 18 of them, that now our flights have been cut back as well. So it's not just those 40 airports that got affected. It's so many other airports and so many people. Thanksgiving coming up. Who's traveling for the holidays? You're going to be able to get on a plane. TSA showing up. Can I get through TSA pre? Is it going to take 4 hours to get through security? Is security angry because they're not getting paid and they're being forced to work and I'm the one they're going to take it out on, blah, 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 right? So fixing all of this, tremendous. So we saw the gap in the S&P today, and we'll go back and look at S&P in just a minute. But we saw the gap up on the S&P today. Here's the close, Friday. Here's the gap up. We saw that gap, and I'm like, yeah, I want to ride this, right? We're going to have something that's going to make a move. And APP was the best setup that I liked at that time. Some others have set up since, but the best one that I liked at that time. So 2 minutes in, the stock had closed. These are 1 minutes. 1 minute candle. Stock had closed. It opened up slightly on the second minute. It pulled back nicely, bounced. And after that bounce, I said, all right, we're just going to do one and then take one contract only. I'm not trying to rule the world here. If I can get something and clear some profit on it, so be it. All right, a couple more trades and I'll read those in a moment. Right. And then before we hit up on resistance, which was about 10 minutes later. But this, guys, this netted about $10, roughly about $10 on a $26 option. Call it a $30 option. It makes math easy. $10 on a $30 option. We made 33% in about 10 minutes on this trade. I can think of some things that are much worse off than that, right? I am not complaining about those numbers. Well, the option's expensive. Yeah, they're $26. It's APP, and guess what? It's Monday. So you're going to have the most expensive, and it's Monday morning. You're going to have the most expensive options on APP right out of the gate, right? So overall setup was great. It was a wonderful setup there. Patty said CrowdStrike 4%, Meta 6%, Chipotle 6.7%. I try to keep each trade to around $1,000. Patty, I'm assuming you mean $1,000 in the trade, correct? Amelia's been trading VIX. She brought this up this morning in a conversation that we had that she's trading the VIX, and she's up 28% in 6 minutes today on her debit spreads. Yeah, so Patty said her investment in each trade is around $1,000. So equal dollar trades. I love the methodology. It's the right way to do it. No, it hasn't improved yet, Brenda, but the expectation is, according to Johnson, there's no question it's going to pass. We'll see. It's going to take a while for the mess to get straightened out. Yeah, it absolutely is. But we got to start somewhere, and this is it, right? Getting it fixed. Lots of kudos there, Patty and Amelia, all of you. So fantastic. All right. Let's bring it back over here. So that was me on my setups for today, guys. From last week, just look at the end of the week. This was this week on Thursday, right? We did the update for Pop. So Thursday we closed. Amazon, this is one contract trades. And no sense in showing you the big one right now, right? Let's just focus on what the average person needs to do. Forget about column D that says how many contracts we traded. Don't worry about that, right? Every one of these are one. You can see the stop out quantity is one. It's the way the spreadsheet was created 10 years ago for me. And I've just not spent the time to figure out how to put odd numbers in there like one, because it's a Pop spreadsheet, which only trades tens and fours. And now we've got times we trade two and so forth. So on Amazon, we're up 250. I'm sorry. We sold at 250. We're up $179.40, right? For one contract. And that's all one day. These are all day trades. Every one of these are day trades. DoorDash, we're up $85.80. Home Depot, we're up $413. Lilly, we took a bath. We're down $608.40. Why did I say we took a bath? I'll show you. And then you look at SPY, and we're up $183. So we're up $253 on for the end of last week on just one contract. But I want you to understand something. The number down here at the very bottom, where it says total P&L from January 1st, it's actually 2025, not 2024. Let me fix that. From 2025 is $150,433. That's one contract of each of the trades that we take in Pop. And why I said 608 was a thrashing for us there. We don't have those kinds of hits. AMD was the only that came anywhere near it. I don't think we have anything bigger than that for the year. We might. Let's see. So $7.80 was our hit. $23, $249. Right? There's a 382, 452. It's not that we don't get trades go against us. Oh, 877 is horrible. Also on APP, right? 1560, 390, 226. But there's a $2,000 win, right? On that one. A lot of wins, 200, 100, $19, $58, $355. We don't have a lot of big numbers in here of hits, guys, and that's what this is all meant to be. 530. So if we go up 540, let's see, 663. We have an 800 at the bottom, right? So let's see. So, I mean, what is our average hit here? $200 or $300 is our average hit on our trades, right? Give or take. So overall, not too shabby. What's our average wins? If we take this down back to the bottom to where we're more current, $2,000, $200, $700, $600, $500, $1,000, $1,000, $300, $600, $600, $600, $200, $500, $900, $300, $200, $300, $400 if you want to average it, right, on the ones that go in our favor. And we have a lot more of those. So we had a really good week last week. We've got a really good year going on right now. One contract trades, $150,000, almost 2 full months, a month and a half, I guess, a month and 2/3 left of the year. We do have the Thanksgiving week, which is normally lighter. We've got that Christmas to New Year week, which is always lighter. Even the last week of the year is fairly light. Andrew dropped that in. Yep, there you go, Kim. It's right there. Someone asked about the Pop link. It's right there. So he dropped that in for you guys. Okay, let me go back to our presentation. And let's go look at economic reports. Why? I have no idea, but we'll do it anyway. All right, what do you mean why we don't want to look at it? Because they're not accurate. Oh, let's not do that. Let's go here, hit more. Tentative, 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 tentative. I forgot the Fed member that was on CNBC earlier today. If anybody remembers it, drop it in the chat box. I'll gladly say the name. Um, it wasn't Powell, it was a Fed member. And he said his opinion is we need a half point in the month of December. Now, from what I remember, we're still nowhere near anybody betting on half point. And if you do want to bet on it, there are places out there you can. I know Robinhood, you can bet on who's going to win an election, what date the government shutdown is going to be, blah, 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 right? You can bet on all of that stuff. But everything is tentative. So they're all red, they're all tentative. The Fed is saying that, and again, this Fed member, it was interesting, the conversation. If you've got a way to go back and watch it, it was probably 11-ish, 10:30, 11 today. And he was saying that, we're not getting any good data right now. It's all delayed. And the models that we're using, we're backward thinking. We're not forward thinking. We're not anticipating what's going on in the future. We're thinking backwards of taking data from 6 months ago and pulling that forward and reacting to that. But we're already behind the times because that was 6 months old data already. And that's what the Fed does. You need so many quarters to consider a bear market, so many quarters in a row to be considered a bull market. I mean, all of these things look, and I'm not saying they were wrong. That's the tools they've had. With AI and so many other models right now, I think there are much better things out there than the way the Fed analyzes. Are we going to get a half point drop? I don't think so. My opinion says no. Would I like to see it? I'm not sure. Too much too fast is my fear. I'm okay if we get another half. I really would like another half. I know Tripp, I'm not sure if he's in here, but I know Tripp in our conversations has said over and over again, that he would like to see nothing in December and then a cut in January. I'd be okay with that. I don't know the ripple that would happen in the market if that was it, but as long as we get that next quarter point, I think it's going to be important to have. I think people are looking at these numbers and realizing what it's costing them. And if we can get under control, credit card interest, which is freaking insane what the government has allowed these credit card companies to do. Oh, if you're late on a payment, we can go to 29.9%. Why? Crazy. Dutsubatsu, you're nuts in the head to think that those numbers are acceptable. Jim said CME website shows a quarter drop for December of 62.9% chance right now. Okay, appreciate that, Jim. So, but based on what we're seeing, there are still some Fed members that are talking, half point, which would be one full point at the end of this year, is what some had said months ago after that first cut, that we were going to get a full point this year. And I've said it from the beginning, that requires a half point cut because we have nothing in one of the months. We have nothing in November. So September, October, December, we have nothing in November. That would mean somewhere we had to have a half. And obviously we only have 1 month left, December. So it has to be there. Is it the right thing to do? Does the holiday season affect all of that? Yeah, it may mess it up a little bit. You may see some, whoa, how bad are things that we had to drop a half type thing. But I also don't know, since we haven't had any good data in 40-ish days. And even there, we don't know if the data was ever good or not before that, right? Government influence on numbers, right, wrong, or indifferent, I don't know. I mean, I heard a government official one time say, "Well, it's just the decimal point was in the wrong place." Yeah, by three places, the decimal point was in the wrong place. That's a problem, right? When it comes down to money and numbers, right? All right. So there's really nothing here, guys. Everything is red. Just whether the report comes out or not, is guess. Monday, Tuesday, Wednesday, we've got Thursday and Friday. It's all pushed back to. And then how quickly can these departments get spun back up again to give us the actual data going forward is what we're going to have to see. All right, market review. So let's go look at the S&P 500. So you can see where the government shutdown was. I think this is important to keep track of that. And we had been down below that government shutdown price because we had a little bit of a rise for 7 or 8 days after that. And then that one big day down on tariff worries, tariff fears, right? Sorry, I think this is bears, just the Soros of the world, just yelling at the top of their lungs that we need to short everything. The world's coming to an end. And then we rallied to all-time highs on the market over the next month and a quarter or so, 5 weeks, right? Good pullback. So we had a swing high. And here was our swing low. We had a higher high, a lower low here, which was the concern, lower than this one. And now we get this pullback, and this bounce now allows us to go in there and identify this bottom as a higher swing low because we got the V bottom in there. Not this, right? Not really here. I need a bounce. I want clear. I'm not looking for, well, might be a bottom, which would be here. Might be if we kept falling, and it might be, but this is clear. That was a higher bottom, right? Now, what's the goal? Get up above the higher high. Now, we're going to do it how to eat an elephant, one bite at a time. We're going to do it one line at a time. We've got to get through that 68.34. We've got to get up to that 6,920 level, which is about the all-time high. We've got to face it one at a time. But we have now moved back into a true bullish bias. All the moving averages are in the right order. Even though we dropped for the last 4 days below the 8 moving average, and for the last 8 days in total, we've been down overall. Right? Even though that's happened, our moving average is maintained in the right order. Why? Because this run in here with all of these gaps just drove our moving averages up, and we were able to hold steady, right? We're down here, of course, it got down, but the lines remained where they were. Not that the stock didn't get below them. Our moving averages remained in the right order. That was important. So when we come back, it's an easy fix. We're back in a true bullish bias. We're at a rank of 1 right now, which I absolutely love. I would love to see this pullback close now here a little bit higher. Actually, I'd like to close, pull back to that 67, 80, 81 level tomorrow, day after, whatever it is, and bounce, right? That would be the honey spot, the sweet spot right there, off of that. Tripp said 10 and 30-year bond auctions this week shows yellow on Forex Factory, but I think they're more important to long-term economics. I agree, Tripp. Last week I traded the gaps on SPY. Good, Brenda. Yeah, I mean, there's great opportunities there if you know how to trade them, right? It's building out a system. And for you, everyone needs to learn how, or to have the SPY as something that they trade. You've got to have a trading system for SPY. Sometime in 2026, I will be teaching a training on just trading the SPY. Right? We're going to do an hour or two, whatever it is, whenever I put it together. I've got to get it all into manual format. We're going to teach at least an hour, if not longer, on just how do we trade SPY? What's the model for this? Identify, enter, manage, exit. All of that is going to be part of it. All of the strategy creation system has to be part of it. But we're going to build that out sometime in the beginning of the year. So I like where we're at. I love where we're at right now. What if we fail? What if we fall apart? Great. You get down under the 21, so what? Can we stay above the recent swing low? If yes, awesome. Then we have a higher swing low. Can we stay above the recent swing high? Yes. If so, we've got newer all-time highs, right? We're looking at what ifs. This is not it has to go up and I'm not doing nothing else unless it does. Hell no. I sit here every day back in my chair like this, position number 1, looking at what's going on and saying, okay, what do I see? What has to happen for me to want to take a trade? Where does it go to next? Setting 4 different targets. If I took this as a trade today, let's say off SPY, off of SPY, right? My first target would be under this 681, right? Wherever it is, somewhere down below the 681. My second target would be my micro day trading, which is where I'm watching the run. When it runs out of steam and rolls over, I'm out of the trade. That's usually because I'm looking for fast momentum in there, right? Number 3 is none of those were hit by the end of the day. Well, actually, number 3 is going to be a stop, let's say. Okay, stop is somewhere down below that 675.75. Number 4, nothing was hit by the end of the day. Set an exit at 3:45 p.m. Eastern time or whatever time you're comfortable with. Get out of the trade, walk away, right? I know those 4 numbers. Nothing else matters. Set that up, walk away. Whatever happens, happens. You don't have to be there. Now, micro day trading, you've got to watch it, right? But I'm looking for fast. If I'm taking a micro day trade, I'm looking at quick. 10, 20, 40 minutes, an hour would be insanely long normally for micro day trading. I'm looking for a fast run up, the pullback where you're going to see the volatility flip, prices start to drop, maybe bid-ask spreads open up a little bit, and I'm out. I'll take my bat and ball, I'll walk away. Fat, dumb, and happy without worrying about where's it go next. Yeah, Ed said, Scalper Ed said SPY is a great place to make money. It is, Ed. It's phenomenal. Yeah, Ralph said, looking forward to the SPY class. Yeah, me too. It's been a long time coming. Here's the thing. Every time I mention something to my team, they become vultures. Oh, Rob, we need this, we need this, we need this. It's like, whoa, 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 whoa. I just said, let's look at getting one on a schedule. And yet I'm getting bombarded. Today, two class names we needed, two titles we needed, it's for new stuff that we've got coming in 2026. So I'm a little bit less open about we're going to do this because the second someone hears it on a recording or whatever it is, it becomes gospel now, and I've got to get it done. Like if I didn't say it, I just said 2026, so they can't bust my chops. But if I said we're doing it in January, I'd get a phone call at 101 today, right after this class, saying I need you to get me this by tomorrow. So, but it is a class we're going to train on. I can't wait for it. So, um, yeah. Oh, Mary said, I'm in the room with you, right? Uh-huh. But I already told you guys today we're going to do it next year, so we're good. Um, okay, so my team's well aware of it, though. All right, let's go back here. All right, so guys, Inner Circle coming up on the 10th, which is at 7 p.m. The 17th, that is, Amelia, today we're doing it on a Monday, correct? That I'm teaching on there. Let me see. Yes. No, 24th. No, so these are our check-ins, the 10th and the 17th. On the 24th, we're not going to have a check-in. We're going to do it. We are, but we aren't. We're going to do the check-in, but I'm going to teach the 2-hour training, which is the core training there. I'm going to teach that on the 24th, which is the Monday, because of the holiday, because of Thanksgiving. Mastermind is on the 11th and the 18th. Trading You tonight, that, and then on the 17th. Monster Market Movers coming up on the 19th, which is next week. Pop Trading Coaches Playbook and Power Hour, Cover Call, Explore, E-mini Think Tank, all on regular schedule. And we've got one more kick-ass with SPX, which is on the 12th at 8 p.m. So if you didn't get a chance to check that out, I think Andrew dropped a link in there. So go ahead and click that and get registered for that. All right. Weekly training topic. Before we go there, I didn't look at VIX. We didn't look at fear. When we go to SPX, we always look at VIX. Let's go back. All right, so we've dropped now. We had a nice gap down. We still stayed in the green zone. We've now dropped down under 18. We're at 1796. So we're low. Don't worry about moving averages. I don't care. But we're at low right now on the VIX. We had a low down here at this 14 in jingle. We got up here, our lows were more like 16-ish, give or take. So are we going to put in, I've got my lows are getting higher and my highs are getting lower, right? So we've got a little bit of a wedge happening in there. So how much are we going to float inside of here before we break one way or the other? And I don't care which way we break. I just want to see it break, right? But VIX, fear is down a little bit. I think that Friday was, massive overreaction on fear with the move all the way up here. I didn't see the warranting for that at all. Okay, so now let's go back into weekly trading topic, right? Trading the increase in volatility right now. Now, it's funny that this topic, I choose the topic for the week on a Wednesday, based on if there's an economic report coming out or something going on in the government happening and so forth. Do we have volatility increases? I mean, I saw today on APP, there were times that the bid ask on some of the options were $4 and $5, right? Which is high for APP. It's not a cheap bid ask. I was still about $3 when we did the trade today. It's not a cheap bid ask, but overall, not normally a $5 bid ask spread, $6 bid ask spread. So with this increase in volatility, the announcement from today, let's talk about why the vol goes up first off, right? You've got an equity, a stock, and we'll look at Apple, okay? Apple is a very highly owned stock. It's blue chip, stodgy, old, boring. Although it is a tech stock, it's one of the more boring tech stocks. It's not an AI tech stock. It's not, the Nvidia types of the world right now. Amazon, that's crushing it. This Christmas season, how are they expected to do? They're expected to blow the doors off, right? Absolutely expected to blow the doors off. They laid off 10, 14,000 people. I forget what it was. It was one department. The entire department was laid off. AI took it over. They don't need people for that, all those people for that department any longer. It's all AI. But yet, excuse me, they're hiring 250,000 seasonal workers. Now, some of the people laid off were high income earners. So it's not tit for tat. It's not one for the other. It's not an equal footing, right? But 250,000 people giving jobs for 3 or 4 months is going to put a nice injection of income into the economy for something like that, which is wonderful to see. But now you have a company that is out there, take an Amazon, right? So is it volatile? Yeah, it's got some volatility to it, but it's not crazy, right? But there's some volatility to it. And news comes out of, let's say, the government shutdown. The market maker for the options market is sitting there in the morning back here talking with the other market makers, saying, all right, what the hell is the reaction going to be? Are we going down? Are we going up? I don't know. I think with the government shutdown, we're going to go down, but I don't know. Next market maker, yeah, next person in the firm, or getting on the phone with Goldman Sachs. What do you think? Merrill Lynch, what do you think? Whatever it is, that a conversation with their circle, right? What do you see taking place? So the market maker says, you know what? I am concerned that Brenda is going to jump in on a trade today. And as soon as she hits enter, the position is going to take off in her direction. And we're going to get caught because we haven't had a chance to offload our risk in that trade yet. So we're going to increase volatility, which means we're increasing the price of the option. We're increasing the bid-ask spread. And we're going to CYA, cover our assets, and protect ourselves just in case we get the massive move after somebody pulls the trigger on that trade. The announcement comes out, the market jumps up, the market maker already overcharged on the options, big bid-ask spread, vols are higher, right? And they've protected themselves somewhat in that trade. But then as the news is out, and we go back to the S&P 500, we look at the government shutdown, the news was out over the next 1, 2, 3, 4, 5, 6 days. We continue to make smaller all-time highs until we fell apart with China tariffs there, right? Which the news just jacked up that news unwittingly, not knowing that what they were doing was completely wrong, or knowing, who knows, right? But they jacked up that news. The market collapsed. Vols went nuts at that point. Yes, they had started to jack them over here, but then they settled down because the market was getting calm. It was following the 8 moving average just as it has been. That move there was, oh my goodness, when, heavens forbid, someone steps in and buys puts right on that announcement. We need to jack numbers up so that someone doesn't get into a trade where we can't offset our risk at that point, right? Papa needs a new pair of shoes? No, Papa needs to protect the money he's got to buy his shoes with, right? Because they can get crushed all with that. There's a, I can't remember the trader's name that made $2 million in a day. An option, it was a flow trader or market maker, made $2 million in a day and ran into the bathroom and threw up. Because that was the moment, the first moment ever, he realized he could have lost $2 million in one day. What he made, he could have lost. He was a good trader. Might have been Jesse Livermore. I don't remember. But it was a very humbling experience to have made all that money because he realized what could have actually happened to him in there. And when we look at the volatility, the market makers are putting it in there for protection. It's all CYA, cover your assets, every bit of it. Okay? So now that you know that, what are we looking to do? Well, if premiums are high, you tell me. type it in the chat. If premiums are high, are overvalued, is there something you can do to still make money? What can you do? If Amelia's sitting at her computer, she'll be the first one to type it in. Right, Jim. Amelia said, duh. um, Sell, Mortimer, sell. Exactly. Exactly. Spreads, selling, sell instead of buy, 1,000,000% spot on. I'm not saying that buying is a bad strategy. I'm not telling you don't buy in those markets. Not at all. Not at all. What I'm telling you is what is going to make you comfortable to say, I'm going to get into this market today? What gives you that comfort factor that says, ooh, 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 I'm in, I'm in, right? It has to be something that you are okay with. If you look at a spread and go, hell no, I'm not doing that. Credit spreads scare me. I had one of my students out of the DC area. He was a phenomenal spread trader as long as he was trading bull put spreads. He could not understand a bear call spread to save his life. Not at all. He could not trade them. He could not recognize the turning his hat backwards and saying, okay, now the market's doing this, we're going to do that. Bear call spread. Wait, we're going bearish by using calls? Yes. No, but he got a bull put spread, right? Debit spreads. Amelia uses debit spreads, right? Where it's costing her money. She's not getting credits. It's costing her money. But she's got a system that she's built that works for her trading style, right? And she's done well on the selling positions with VIX in the last little bit with her diagonal, not diagonal, sorry, with her debit spreads. Could you do a diagonal spread? Absolutely. Could you hold overnight? Yes. Do they have to be exited today? They don't. But you've got to build your system for you. So if you are going to look at a way to trade, spreads is a great model to try to work right now. Now, with that being said, you need to have a system. If you've not traded spreads, your first instinct should not be trade a spread today because of the volatility we've got in the market. Hell no. Your first instinct should be, I need to learn that. I need to learn that. Is anybody in here a tool fanatic? Hand tools, power tools, I don't care if it's woodworking, metalworking, car, I don't care. Is anybody here a tool nut? I was going to say, Amelia, you better put yours in there after all you just bought for your shop. Okay, so a couple of you, Patty, Amelia, Tom, right? That's me. All right. Tools, yes, love different tools. I remember we were first married and telling my wife, we got to get this thing fixed. What does a contractor want? $200. Oh man, we don't have $200. I know. I'll fix it. Okay, but I got to buy a tool. How much is the tool? $400. Yeah, but that doesn't help us any, but I got the tool for the next time. Right? Ooh, we need that special tool. Right? Yeah. And to me, it's not labor. Doing that work on the house, on building things, is not labor. It's a labor of love. It's a labor of love. I enjoy doing it. If you could see over, I don't know if you can, over my left shoulder, there's a rack hanging on the wall there with a few rifles on it. I built that. This shelf right here, I built that. Right? And 100 other things that are in the house, things like having this room I just can't reach. I love doing it. I don't mind the repair work. It's not a matter of that. It's not the money. It's not. It's the perfection that has to be put in there to get it done. I have, my basement is a full-blown wood shop. Wood lathe, and a lot of my tools are Powermatic, right? So Powermatic wood lathe, 37-inch center to center wood lathe, 8-inch joiner, 16-inch planer. My table saw is Delta, which is a good saw. It's not the one I want. I want a safety saw stop, but it's the one I have right now, right? So, but everything I have, I've got a CNC in my garage, a 48 by 48 CNC. So for me, it's, again, that labor of love. I enjoy doing it. But if I need to fix something, I am not relegated to one bucket of tools that I have to work with to fix it. Now, I'm not saying that you have to have all these tools to be able to fix things. Right? But I can tell you that it becomes a lot easier. Can you just trade directional buying calls, buying puts when the volatility increases. Yes, but like I did today, I had to cut down the number of contracts I traded. I went to one because of the gap we had made on the open today. The pullback not as steep as I'd liked it to be, and it had some risk associated with it because I was giving a big stop in there before getting out because I still had to be down below that fib line, that support level, right? Unless it's plumbing, it's not a labor of love. Yeah, I'm not a plumber. That's not for me, Amelia. Um, yeah, there you go. Jim said, if you're going to do the job, if you're going to do the job right, you need the right tools. Exactly. And all of that to say, selling is a tool in your tool belt or your toolbox or an arrow in your quiver or whatever analogy you want to use. But you need to have multiple trade setups that you can take advantage of, right? And it's like it's the I don't again, I don't enjoy plumbing, but I do have some of the specialty tools for it, right? Now, when I was a little bit of a younger man, I would crawl under a sink and fix it. I ain't crawling under a damn sink anymore. I still have the tools, but I'm not crawling under a sink. I'll hire a plumber to do that. I can't contort my back that way and stand up again. It would be impossible for me. All right, with my bad back. But I've got the tools for it. Okay, but I know what to do. I could point to a helper and say, you see that there? Change this, pull that, put this in, toot that there. Here's a torque wrench on the car, go to 140 pound. I could do all of that, right? But I've got the right tools. You need to have the right tools in your bucket. Right now, and I am a firm believer in this, every one of you should have a main, one singular tool that you focus on. And to me, it's directional trading is the main. Not that there's anything wrong with selling. Problem with selling, you take a credit spread, you've got to buy one option, you've got to sell another option if it's a credit spread, right? So now what? How do I handle it? What do I do? And I've seen multiple people walk out of live events on day 2 of me and come up and say, okay, now what? What do you mean now what? Well, I did all the credit spreads that you did in class. What do I do now? What do you mean, what do you do? You didn't do them for real. We talk about if you're going to follow this, and you should, go into your non-funded account. Oh, hell no. If you thought they were good trades, I'm doing them too. Yeah, but my phone number doesn't come with the event. I'm going to make decisions on this next week that you can't make. What are you going to do? Right? You've got to have an understanding of how that strategy works. So just getting in for the sake of the market drop today or is up today, so I'm going to go ahead and do this type of strategy. No. When it comes to the buying component, again, nothing wrong with the buying side of it. When it comes to the buying component, you want to be very highly focused on the right stocks. What does that mean? If you are focused on lower price stocks, that 10, 20, 30, 40, 50, $60 even, I don't know. But if you're focused on those lower price stocks that have very low Wilder's average true range, and you don't get enough movement daily from it. Yeah, today you might have had the gap that drove it up and you gapped up $4 and the Wilder's average true range is 2. Well, we moved double already our normal, right? So how much more are you expecting? Right? You want to have something that's got some room to move behind it. Now, I'm not saying it needs to have 30, 40, $50, but if we look at this list, which is POP, and we sort this by Fibit, the only thing bigger than the SPX that's on our list is booking right now. APP is $68. Fibit is twice the Wilder's average true range, which means we've got a $34 daily move. So the $10 move that we went from 26 to 36 on the option was easy, right? We could easily do that on that, right? What's the movement potential on that stock, right? That's Wilder's average true range. And we use Fibit, which is a 2-day number, because days like today is where you're going to see that 2 standard deviation move, right? That 2-line move. Right, Netflix right behind that at $60, Eli Lilly at $55, Carvana $44, and so forth. Right, every one of these. I'm not saying you've got to trade these high price stocks, folks, but what about Adobe? Adobe is $17, $18 Fibit, which means it's a $9 average move. Right. What about Amazon that moves $7.50 a day? Guys, you realize if you get a bounce, if I get a bounce off the 241, 242, let's say, and let's just say that I take the entry at 243, and I get 10 contracts, okay? My resistance is at 247. So my target is going to be 246. And I'm just ballparking this, guys, right? Just to see it. Okay. That's my target. So I know that I've got a $3 opportunity on my stock. Okay. Movement, which means with the 70 delta, I always look 65 is what I'd like to see, but 70 is where I'll always go with the numbers because it's easier math in my head than multiplying by 0.65. 70 I could do, it's $2.10. We'll round it to $2. We're not going to worry about gamma and the increase of delta. It's going to move $2 my options. The only thing you've got to do is look at that and say, is that worth it for the risk I'm willing to take? And then you'll calculate where your stop is and determine, do I want to do this trade or not? If the answer is yes, awesome. If the answer is no, awesome. But you need an answer, right? And you have to evaluate that. So if we get this gap up today on an Amazon, you've got to evaluate, is there a good setup in there? Now, for every one of you, if you're not in Trade with Rob, you're making a mistake, right? My goal is twice a week to get videos out because there's only 4 opportunity days. We don't do them on Friday because I do the SPX video on Friday, which kind of wraps the week up. And we'll do 1, 2, 3 a week. We don't ever do 4, okay? But it's really predicated on, did I find setups that I like today? If not, I'm not going to bother sending a video out. I've got to like what I see. One of the reason I'm telling you this is one of the videos in this area is a high volatility switchback trade. A switchback is when the stock closes near a fib line, like right here. That's not right there. So right here, we close near a fib line. It can move up if we get a bounce. It can drop. We've got a bidirectional move. So no matter what the market does, there's a potential, not it's going to make money for us, but a potential to move either direction tomorrow, right? I love those setups. The high volatility switchback trade says just what happened today. When you get a gap up, most people sat back and went, all right, was this an overreach? Was this too much of a gap, right? Was this a failure gap where it's going to drop off of this now tomorrow and come plummeting back down, right? Well, if I look at this, go to a 5-minute chart on Amazon, we gapped up. Did we ever pull back to the fib line? I need this pullback to happen fast. Did we ever pull back? No, we didn't, right? So now what? Well, we ran up to resistance. Did you take the trade? No. No, no, no. Oh, Rob, what about a 1 minute? Yeah, I don't care. Look at this. I mean, we're talking about 248 was the open, 247, but we only have resistance at 251. So we're pretty close, right? So the first 5 minutes, and I knew the answer already because I watched Amazon. We gapped up and we just kept running the whole time. We never got a pull ever on this position on Amazon. So no trade there, right? But I had a plan. Amazon was on my list. I had a page open for it. If Amazon gapped up to where it did and pulled back quickly to that 247 fib line and bounced, right? Then we've got a potential entry. And that's what you need to look at. When you get these gaps like this, what is your plan on how to trade it? What are you going to do, Dick? What are you going to do today that you didn't do yesterday? Right? Let me see. Oh, yeah, Patty said, I love my phone number doesn't come with the event. Yeah, people like freaked out. Man, I paid $4,000. I don't get your phone number. I said, you get a phone number. The phone number of the company. The company pays me to come and teach 2 days. I was paid well, as I should be. Because I've got specialized. But after that, besides, you're supposed to learn with non-funded trades, not unfunded trades. That's the stuff the SEC loves to catch. Oh, you're telling them to put real money in, huh? Nice. Okay. All right. Perfect. So listen, bottom line is, how are you going to react to this? So let's go back to the S&P and kind of wrap this up. I love what's going on right now. I love the move that we made. I love that we opened up above the 8 moving average and above our fib line, which is the 382. We dropped down below with the wick, so the bears tried to take it back. They did not break the 67.65, the super fib. They did not break the 21 moving average, and we bounced, and we're way above where we opened up right now. Okay, we're up 80 points on the day, which is wonderful. Since the entire movement is normally $70 for a day on the S&P, give or take, but about $70. So we had a phenomenal move to the upside there, right? But you've got to answer some questions for yourself as to what you see happening. So the government opens up tomorrow. Today, tomorrow, doesn't matter. Let's say that it happens after the market today, okay? But before tomorrow's opening at 9:30 Eastern time. What do you anticipate the market doing? Even more importantly, do you have a plan for more than one thing to happen? If it goes up based on that news, what are you looking for to take a trade? If it goes down based on that news, what are you looking for to take a trade? If it goes sideways based on that news, what are you looking for to take the trade? And bottom line, you've got to have an answer. If you don't, it's okay. Then the answer is sit on your hands and do absolutely nothing. And there's nothing wrong with that. If you don't know how to trade it, don't trade. Just leave it sit. If it's a situation that you're unfamiliar with, leave it be, but paper trade it. Because the only way you're going to learn how to trade it is to trade it. And the only way you can do it smartly is with non-funded setup, with paper trades, non-funded trades. Okay? But you've got to go out and trade it. The shutdown of the government, or should I say the reopening of the government now from this shutdown, I think is going to bring good tidings to the market. What do you think if the government, let's say it's a foregone conclusion, yes, we do open up over the next couple of days. Pretend for a moment that the answer is yes. What can happen in the market after that's done? What can happen in the market that even better than that? Yeah, Santa Claus is coming to town. What else would you be looking at as a newsy event that could be a catalyst for the market up or down? What is the one? Possibly Trip. I mean, yes, it is, but not the one I'm thinking of, but I'll mention it. Yes, Jim, that's what I'm thinking of. With who, Jim? With who? Yeah, I thought about that one, or I think about that, Norman, all the time. I'll mention it in a second. Right? Yeah, Jim, there you go. Guys, here's my thing. I think that the tariffs, I'm sorry, I think that the shutdown is big. Uh, I think it affects a lot of people in the country. 2 million, federal workers, I guess, but the 41 million on SNAP benefits, really bad, right? I think that's really affected more than the 2 million. Now with the airlines shutting down, it doesn't matter if you got money. If you're flying on a plane and your plane is canceled, you're out, right? And private jets have gone through the roof right now. They're off the charts. I was looking at something the other day for my wife and I, and it's just off the charts what they're charging right now. So we've flown them once or twice before. But I do believe that China tariffs get resolved. I think that's a major bolster in the market. Personally, I could be dead wrong, but that's what I'm talking about. That's my thought, and I have a plan for how I'm going to trade that. Now, I can't lay out the detail of I'm trading it this way today because I don't know where the market's going to be at that time. But my anticipation is a move up, right? Unless we ran up into that with expectation of it, which again, we have gap, and then the news comes out and we fail. I've got a plan for that, right? I have a plan for all of that. You need to as well. You need to have a plan. So the Trip said the Fed, yes, the Fed could be big. I think China's bigger, personally, but the Fed definitely can be big. Peace in Russia and Ukraine, yes, I think that's big. I just don't see it happening. I just think there are two bullheaded individuals that are not going to make the decision to shut it down, to stop. Right? I think we're getting sucked in the wrong directions here with some of this stuff. I don't mean our conversation here. I mean as a country. Right? Are there other newsy events out there? Yeah, there's other things that could happen. Is there, testing of bombs and Taiwan, and there's a million other things, right, that could cause strife. But to me, the biggest catalyst potential is settling or not settling the China tariffs. That's big. Can you still order from Alibaba and get a $6 item delivered from China for $1.87? That's what's going to be big to me, right? That's not going to happen. You can't get it now. A lot of these Alibaba stuffs now have got minimum delivery amounts. I need this much dollars to deliver because I buy a lot of tool type stuff, material type stuff from Asia. And a lot of that stuff has gone away since the talk of tariffs. I think the trade war will just take a new avenue after tariffs. I agree, Trip. Listen, I think there always has to be some excitement in our life to keep us going, right? And tariffs are going to be up there because for whatever reason, the conversations around them are negative by on some for some people. And uh, listen, we've been ripped off for decades from other countries. It's about time the U.S. gets some of theirs. Right. Jim said the FOMC could it's every 6 weeks. Tariffs could happen any day. Exactly. Right. There you go, Tom. Um, yeah. How is there anything left standing in Ukraine? And Z is losing control of the economy. And there's all kinds of sub factors to what settling looks like or not, right? China is definitely going to need to save face. We're not going to be able to smash them and say you're charging us 20%, so we're charging you 20%. I don't think we can get away with that. I just don't see that happening, right? I'd love it. I just don't see it. All right, what stocks you guys want me to take a look at? We got a couple of minutes left. Let's go ahead and do that if you have any. If not, you guys are all ready to rock and roll on your own. That's good. CMG. Chipotle, Mexican Grill. My wife just came home for lunch and she may hear me talking Chipotle. She hates it. She can't stand if I use Chipotle. She goes, it's Chipotle. And I stopped saying Chipotle for a long time. And then I heard Grant Cardone call it Chipotle. I'm like, he's a self-made billionaire. He could say it, so can I. I don't need to be so prim and proper. And the rain came down, down, down on this one, Patty, scaring the crap out of me. I mean, we got rid of, excuse my French, but we got rid of this in pop, way back, right? And we couldn't make any money. $40, we just couldn't make any money. And now it's back down at this $30. I think they're getting a bad rap. If some of you would remember, where I would be there every week at Chipotle, whatever the right way to say it is, I don't care. I'd be there every week. And it got to a point, and I did everything. I ordered on the app. I went and picked it up and come home, get my food, open it up, and my bowl is like this high. I'm like, what the hell? And that's with all the lettuce they put on top, right? Like, no, what's going on here? And then, certain restaurants were cutting back more and smaller portions. I went to a couple of different ones. I found one that was a little bit better, but then it was really bad on a Tuesday or whatever, right? I don't know what their gig is. Their food is out of this world to me. I love their food. I love their model for their food, right? It's simplicity at its best. They got a couple of great items, and people just keep reordering over and over again. But with where they're at, Patty, look what I mean. We're sitting at this 30.53. I haven't looked at this in forever, right? I mean, July we drew the fib off of, but I haven't looked at it in forever. And I mean, we probably need a fib it in there. Yeah, we definitely need a fib it in there. We need fibbits of fibbits on this puppy. But if you look, we've got about 27 as our next downside target. And there's nothing that would want to make me trade the upside on this. And they're only moving a buck. 275 is the fibit, so they're only moving half of that, so $1.40 ish a day. So I'd be very careful. I'm just not a fan of it right now, Patty. I'm not saying it's a no, but be careful on it. Gold, GLD. Conversation piece in our house every day is my wife asking the price of gold. I like where it's at right now, Brenda. There we go. I just had to wait for today. Big gap up. You ready for this? Watch. Hey, Ro. Ro. Gold is up $9 today. Gold is up $9 today. Just gonna open the door. We're in class. We're talking about you. Gold, gold, gold's up $9 today. Yeah, really, it's up $9. Yeah, they don't think you're here. Just yell.
No way.
Yes, $9 is up today. So I liked where it was, Brenda. Forgot we had it to settle on and let it set for the days. So get above that 380, retest and bounce. But I'm looking at that 403 for sure. We love Ro. Thank you, Tom. Appreciate that. SPY. As soon as she heard that we were still in class, she closed the door. She hates being on camera or being heard. Brendan, I love where it is, but we need to retest to the 675, 676 and bounce, and then 681. So I'm all good for that. Oracle, Norman's asking for, or CL. Woo! Yowza. So retest at 249 and fail, Norman, down to 234. Nothing else I'd want to do with this at all. I'd like it to close near it first. Even on a good day like today, they can't get a bounce. So, um, uh, there you go. All right. I think that was the last ones. All right. Excellent. Hey, everybody, listen, Andrew dropped a couple of links in the chat box. Go ahead and grab that. Get in Brandon's class. If you're interested in what we're doing with power option plays, check it out, guys. For the quarterly, it's a 2-week trial. So cost you nothing to learn. Take advantage of it. With that, everybody, have a great rest of your day. And I will see you all at our next update. Take care, folks. Bye for now.